All right, welcome back. Larry James, speakwithlarry.com. Okay, I'm going to jump right into video number 2. We're going to talk about some more stock market information. We're going to talk a little bit about diversification. Have you ever heard that word, diversification? The most important rule of investing is diversification. And it means diversifying basically means not putting all your eggs in one basket. Smart investors don't put all their eggs in one basket. Buy several stocks, not just one. When you buy a stock, don't just buy one stock. Don't just buy two stocks. Buy many stocks. Spread your money into markets across the world. Diversify across different asset classes and types of stocks. Small companies, large tech companies, real estate, small businesses, gold, silver, etc. Diversify. That way, if something crashes on one, you still have others that are still generating. It's like having multiple streams of income. When you have multiple streams of income, if one dries up, you still have several other to maintain you until you reinvest into something else, right? That's the way that works. Now, what is the Securities and Exchange Commission? Have you ever heard of Securities and Exchange when it comes to the stock market? The Securities and Exchange Commission, SEC, polices the stock markets to ensure that the markets are safe for all investors. Isn't that good to know? The SEC, it polices the stock market, and they are in place to protect uninformed investors from sharks. Anyone offering equity to the general public is subject to the rules of the SEC. They forbid insider trading or trading with information that is not available to the general public, which, that releases some of the risks that are involved, because in certain other countries, you can invest your money and they may just take your money and run. But because we have the SEC in place and it's respected, then they police the stocks that are available for the general public. Now, we're going to talk about stockholders. There are two types of stockholders. First is common stock. And this is the way that works. Common stock, they have voter rights. They are paid last on the list. And they may or may not receive dividends. Then you have preferred stock. They have no voting rights, but they are paid before common stockholders and after debt holders. Remember I talked about debt holders earlier? And they receive a guaranteed, listen to that word, guaranteed dividend. So when you're a common stockholder, you may or may not get a dividend. But when you're a preferred stockholder, you're guaranteed a dividend. Now, the next one I want to talk about is, what is an asset class? You ever heard of an asset class? An asset class is a collection of assets that exhibit similar characteristics and operate within the same market. What are some of the major asset classes, you may ask? Well, stocks is one of the major asset classes. Ownership of a company's assets and future cash flows is the definition of stocks. That you own the company and company's assets and future cash flow. That means you get the upside, right? The next one is bonds, a fixed payment. Think of a bond as a fixed payment. You get paid before the shareholders in the event of bankruptcy. Third, real estate, single family, duplex, apartment buildings. Many people have their bulk of their wealth in real estate. And next we have commodities. Commodities are like gold, corn, wheat, oil, coffee, etc. Right? Now, the cons of being an investor. You heard of pros and cons. Let me tell you the cons. Cons mean negative, right? The cons of being an investor is it's not a steady paycheck. the next you might actually lose money. Shut up. And it requires planning, work, creativity, unlike a job where someone simply tells you what to do and you do it. And there's a difference between being a paper millionaire and a cash millionaire. Just because you have cash don't mean that you're really a millionaire. That means you can access cash. You can go get to the ATM or you can go get a loan and just show money. But that doesn't mean that's your money. That doesn't mean you don't have to put that money back, right? Now, the pros of being an investor versus saving, okay? The most powerful force in the universe is called compound interest. That's what Albert Einstein says. Investors can earn passive income, money that earns money or more money. You can start a family business with those that you care about, and the economic power for yourself and your family and your community will flourish, will grow. Because when you have the understanding or the mindset of how investing generates a profit, like think about this for a second when it comes to compound interest. The way that works, it works over time. And if you put $100 in today and you pay 10% interest on that $100, when you get your dividend, you'll have $110, right? So if you do that next month, you're getting paid on the balance, which is $110 instead of $100. So rather than you get $110, you get $121 because you're getting interest on the 110 rather than the 100 like before, right? That's the way that works. Now, I'm not going to go real deep into that, but I wanted to touch on each of those just to kind of give you an understanding of what I'm grasping, what I'm gaining. Now, as I learned this, I want to share it with my audience, and hopefully I can, get you to get interested in what I'm interested in. Not because of who I am, but because the stock market, everyone in the 1 or 3% of the wealthiest people in the world have investments in the stock market. Think about that now. I'm not talking about the 97% who are, kind of struggling or poor, but I'm talking about the richest, the wealthiest people in the world. And, we're all trying to generate an income, right? If you can have your money make money for you, that makes sense, right? So don't just eliminate yourself from the concept of investing in the stock market because, like me, you didn't know anything about it. You can learn it, right? Just like I'm doing it. But as you learn it, share it with somebody else so they can get in, right? So they can get a piece of the pie. SpeakerLarry.com.